Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for August 6, 2023. Hope you guys and gals are staying cool or warm, depending on where you're at around the world. Anyway, I just want to hope you're having a great weekend. We're going to talk about this really crazy week that we had this last week. We actually closed on our lows in the S&P, and I think that has some implications. But before I do that, I just want to say, if you haven't checked out Forex Analytics, make sure you do so. This is a great time because there's volatility here, so check it out. It's $1 for 10 days. You can jump in one of the most active trading communities around the world. I'll talk a little bit more about what we do at Forex Analytics a little bit later. But first, I really want to talk about where we're at. And it's summer, right? We're in the middle of summer. A lot of people in the United States, a lot in Europe are on holiday. And, this is typically that period where you in the markets. Summer afternoons get a little slow, especially once Europe closes for the day. But there's a lot of things that are happening right now that's creating more volatility. We just came off a huge week this last week with the jobs report and all the data that came alongside that. And we're probably going to have a little bit more volatility this week as we have the CPI inflation data that's coming. Now, I want to talk about something before I even get into the charts. The whole sell in May, go away. And I'm wondering, we're in that summer, we're going to get in that summer doldrum period, but the way the markets are acting, this is the period where we might get the go away part of summer. If you understand the sell in May, go away concept, it's from a long time ago, and it's something that I've heard about in the last, quarter century since I've been in the markets. Asset managers, institutions, a lot of people just sell in May. And they basically come back in, September, end of August, early September, and they reassert themselves. And usually if you sold in May and you come back a little bit later in the fall, market's a little lower than where they were at in May, where you sold them. And then you didn't have to deal with all the summer and BS and blah, 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 blah. And then you get back to it into the fall, and then you reassert yourself back into the markets. That's an old school way of thinking, but there's a lot of truth to that. And the fact of the matter is this summer, and if you look at, let's just take a look at the S&P really quick. I'll just pull up the S&P, and you can see just since May, let's talk about the end of May. So the end of May, we were at 4,300. We rallied, sharply going into the end of May. Let's say people come back in September. Would it be unrealistic to believe that we might be back around 4,250, 4,300, and people go, wow, well, I missed a whole rally, but at least I didn't have to deal with it. But we're around the same prices, or maybe even slightly lower. If you look at this long-term channel in the S&P, that makes a lot of sense from where we currently sit. If you think about what's happening with earnings, you think about what's happening with the economy, and you think about just like the technical picture of the S&P, would it be realistic to believe? And again, this is realistic, where you have to ask yourself why not? Is it even possible? Sure. I mean, you have, like I said, we had a pretty bearish close in the equity markets, and maybe there's some profit taking as we head back into fall. And then once we get into fall, once we get into September, October, we'll be looking at growth prospects to see if, we are heading into a recession or not only here in the US, but globally. So anyway, I just want to kind of talk about the sell in May, go away. We might be in that period of time where you start to see some selling come in to equity markets. And one of the big things that I need to point out, even before we even get started here, is if you look at like the S&P and the price action on Friday. I mean, we had a bearish outside day. So that means the candle was outside of the previous day's candle, and we closed on our lows. That's not a good look to start off the week. So just keep that in mind. So I wanted to talk a little bit about, price action, summer, sell in May, go away, and some of the price action that you're seeing in the S&P. And we might as well, since we're talking about stocks, let's just start off talking about some of those earnings that happened last week that we were discussing. Amazon beat. And I was noting this head and shoulder pattern setup, and obviously Amazon gapped higher. That's good for the market, right? The problem with that is even with Amazon gapping higher, it didn't help the broader markets. I mean, because if you look at the S&P, where we closed on our lows. The NASDAQ is flirting with support, and I'm going to talk about that a little bit later, so don't go anywhere. But then you have Apple. Remember, we had earnings last week as well. And notice where Apple closed. It closed below that breakout point outside of the ascending wedge, and it's rolling over. Like if I owned Apple institutional wise, and which how many institutional clients or trader or institutional funds hold Apple? Pretty much everybody, right? And we closed below the breakout point, so now you got a false breakout. You got an ascending wedge that's rolling over. And, maybe one of your core holdings looks very vulnerable at this point. So if you start to see Apple move lower, theoretically, we could, if you just look at the technicals here, the 38% retracement comes in around 170. So from current levels, a 7% fall in Apple, what does it do to the rest of the market? Considering there's just a few stocks that are really powering this rally higher. The Super 7, Magnificent 8, whatever you want to call them. I mean, whatever, everybody's got some sort of analogy for them or acronym they're using, whatever. But you get what I'm saying, and you get what I'm saying here. That's why we have to be real careful with equities at this point. One of the other things, and just kind of talk about last week, just staying in tune with last week. If you look at the dollar index, it continued its rally. So we completed the bull flag pattern that we were discussing last week, right? So here's the dollar index. We had the bull flag pattern, and that completed. So you can say, oh, it's a ABCD or equal leg move, bull flag, whatever you want to call it. But now, now that we've completed that, you can see the dollar index has pulled back to pretty key support. And so, with the dollar back at key support, can we make a rally and can we stage a move? That was from last week, obviously. Can we stage a move to the channel high or even higher? And the answer to that question is yeah, especially if you continue to see some risk aversion emerge in the market. Now, we did have ADP, ISMs, JOLTS jobs data, and then the jobs and the JOLTS and the NFP. So, it really allowed the dollar to kind of reset and get back to neutral on relative strength. So it's kind of free to move towards the 200-day moving average if we continue to see hot inflation, which is this week on Thursday, right? One last thing I want to discuss really quick before we start going into the calendar next week. Talk about the Bank of England and what happened with the sterling. The sterling, it flirted with this with channel support. You can see how it flirted with that channel support, and we popped back up. But notice where we stopped. We stopped at the underside of the trend line perfectly. I know a lot of traders in the Forex analytics community. Let me just take you over to the chat room here. Topic of discussion on Friday was the cable, and we were discussing the cable right at the underside of the trend line in the cable. Let me see, we talked a lot about it in the afternoon, later in the day. You can see this is the Forex analytics community, and people were just talking about the big resistance that we're following, and right into the underside of that cable trend line, and the cable reversed right there. Guys and gals, this is the Forex analytics community, just the general chat room, so you can kind of see how, this is on a Friday afternoon. You can see how active it is. But, the S&P and the indices room, also very busy. The Flowonomics room, the macro chat room, the trades room, right here, where you can see, what positions, a lot of us are putting on. And we do that just so you know what we're doing. Because if you know what positions I'm in, doesn't mean you have to buy or sell whatever I'm buying or selling, right? You don't. But if you respect me as a trader, or you respect some of the other traders that are in there, and you go, hey, Mark, he's getting long the euro. I wonder why. And then you go in the chat room and you start talking to traders about why they're getting long the euro. Or maybe Blake's short the euro. Why? If Blake's short the euro and I'm thinking about buying it, maybe I should ask him why he's short. So maybe I might, second guess or reconsider, or maybe, maybe want to have a little bit of a debate why you're looking to be long and I'm short. Doesn't mean you have to be short or long what we're doing, but just knowing what we're doing and being able to have a conversation with myself and other traders, that's the most important aspect of our community. It's not just me, it's everybody else in the community. Anyway, the cable, going back to the cable, we stopped right at the underside of that trend line, which suggests to me that if the cable takes out these lows, we're going a lot lower. So, I just want to frame it that way. If we break these lows, and you can see this little head and shoulder pattern that's trying to develop, and I'm using a little bit of imagination here, right? If we roll over and we start breaking through those lows, the cable is probably heading a lot lower. One of the things that's happening this week, and I'm going to talk about the cable a little bit more greater detail here in a few minutes, will be what's happening on Thursday. So it's actually Friday morning, I believe. It's Thursday night, very late night for me, but it's Friday morning, what's happening in the UK. So don't go anywhere. We're going to talk about that in just a few minutes. Matter of fact, I'm going to pull myself off of here and let's go into some other charts. And by the way, we also, on Forex Analytics, we have our analysis. It's uploaded here throughout the course of the day at basic technical, Elliott waves, harmonic patterns. So kind of where the setups are from different methods of trading. I'm going to just go through, instead of using the live charts here, instead of using the live charts here inside Forex Analytics, I'm going to actually use them here to get them a bigger view so you can actually see the data a little bit better. Okay, so let's start off with early next week. So Sunday night, it's Sunday night, Monday morning in Japan. We have the meeting minutes. I think they call it like the opinions survey, which is basically the meeting minutes. And the reason why this is going to be so important is if you look at the U.S. dollar Japanese yen price action. First of all, we had a Gartley. If you listen to our analysis throughout the course of the week, you knew there was a big reversal pattern happening right at the 78% retracement right here. We overshot it actually, following last week's action from the BOJ, and then we reversed. So here we are heading back towards the 50 DMA. Also, we closed below the breakout point, which by definition already makes this a little bit of a risk. Then you throw on top of it equity markets coming down. Perhaps the yen might pick up again as a safe haven currency for markets, as markets, move money, and institutions and funds move money outside of the U.S. back into the yen, right, and then also into JGBs. We can see the yen continue to strengthen, especially if there's risk aversion and there's a little bit of a flight to safety. So something to just keep in mind as we go into the next couple of weeks. All right. So anyway, you're going to hear their opinion survey, or I think that's what they call it, out of Japan. But you're gonna hear from other BOJ members, which is going to be very interesting, knowing that BOJ is currently trying to adjust a monetary policy to a certain extent by adjusting yield curve control. So that's going to be Sunday night, just as the market opens. It's obviously Monday morning in Japan, but as the market opens, just be aware that we might see some volatility in the yen. Also on Monday, it's a Canadian holiday. That's something to pay attention to, because Tuesday we're going to have Canadian trade balance and also U.S. trade balance. Now, if you didn't know this because you're not part of the Forex Analytics community, there's a pattern in play for the dollar Canadian from let's see, that was and I'm aggressively long the dollar Canadian, just so you all know. If you listen to us daily on our shows, you already know that. Even if you're not a subscriber, you've picked up on that over the course of the last 2 weeks. Since July 27th, we put in a pattern in play in the dollar Canadian as it was basing off of this channel. And it looks like we can reach for the 200-day moving average. The way I'm actually viewing this chart, just so you're all aware, is I'm looking at it like this. a butterfly pattern, which should take us towards the 161% extension. If I get really lucky, we might make it up to 136, quite possibly, the 127% extension, which would be right about here, and 261% extension, which takes us to about 134.50 before, we moderate and maybe sidestep our way higher. Because what happens is you can see this horizontal resistance. If we break out, nothing moves up and down straight in one direction. So, you might get a move up, pull back over the course of the next week or two, and then maybe, finishing off somewhere around 136. That's how I'm viewing the dollar Canadian, just to give you guys a longer term view. So if you missed it because you're not in our community and you haven't been following along with us with the Forex analytics community, that's fine. There's still some more upside. So I think there's a lot of tradability here in the dollar Canadian to the upside, especially if crude oil continues to roll over, or if crude oil would finally roll over. But anyway, let's continue on here with the dollar Canadian and going into our calendar on Wednesday morning in Asia. We have China, CPI, and New Zealand inflation expectations. So that's Tuesday night for those of us here in the U.S. and in North America, but it is going to be Wednesday morning. Let's start off with the New Zealand. So the Kiwi dollar, we're in the middle of a bear flag pattern. You guys know that because I alerted you guys last 2 weeks. That's why it's drawn like this, because you're seeing the second half of the bear flag pattern. So with that being said, there's still some more downside in the Kiwi dollar from here. We can reach for 60 cents, maybe horizontal support. Remember that this is in inflation expectations. So if the inflation expectations miss, and we continue to see a little bit of risk aversion, why couldn't we reach for this support? Now, the flip side of that is if we break back above 61.50 or so, we could actually reach higher. We could get, horizontal support would be holding. Again, this has to do more with inflation than anything. So if you think it's technicals right now, it's giving us a good guide along the way, but it's not like, set in stone that we're gonna complete this bear flag pattern. It has more to do with the data at this point. Everybody, every central bank and all of us are data dependent. And if you think you've got a good beat on what's going to happen in New Zealand or any other part of the country, you can get ahead of it by using the technical analysis as a guide. That's why we do it. But I will say this: if inflation expectations are high, there's a risk that we could actually reverse higher and not complete this bear flag pattern. So it's just something to be thinking about as we go into next week. Speaking of inflation, actually on Wednesday here in North America, and let me remove this real quick. We have Mexican inflation. Now, I'm going to talk about the U.S. dollar Mexican peso a little bit because, and let me delete a few things. I'm going to start off with redrawing. I'm going to redraw that, and we're gonna do something like this. Matter of fact, I'm going to draw something in blue. So this way it'll be a little bit easier for us to see. Let's do it this way. And I'm going to make that blue. Right? And I'm going to do this in blue. I'm going to give you another one. Okay. And what you're going to notice here, and we could do it either way. We can do it this way, that way, however you want to do it. We have come out of a ascending wedge or descending wedge, excuse me. So that's a bullish outlook, right? It's a bullish reversal pattern. It got us right to resistance, which is 1744. If you don't know that, we give you that information here. So 1744 R1, which is resistance 1. You know how significant that is. Now, if you break above that, it's going to be bullish. Now, one of the things about the dollar Mexican peso is that we closed right around support. Now, I expect because Stocks had a very weak close. I think when interest picks back up Monday, we're going to see Mexican peso weaken. We'll probably see we'll see our way make our way back up towards, the 1720, 1730 Sunday night, Monday morning. I'm mapping this out for you as we start the week. And if you like that, make sure you stop for a moment. Click the thumbs up. Subscribe to the channel below so you don't miss any of this exclusive content here on this channel. And, I've been doing the week ahead videos for 7, 8 years now, 7 years, 8 years. And our team's been putting together through editing and getting this out, email, through our newsletters. They work every weekend tirelessly. So if you like this content, make sure you give them a thumbs up, even if you're not giving me a thumbs up. All right. So anyway, going back to what's happening in Mexico, at the beginning of the week, we might see a little bit of a lift, but what will be the determining factor, whether we break out or perhaps turn back around, will be on Wednesday. We have Mexican inflation, but more importantly, okay, we have the Mexican Banxico rate decision on Thursday. So one of the reasons why this inflation data is so important is because if Mexican inflation comes in below expectations, Banxico is already expected to keep rates unchanged. What if they follow some of the other LATAM markets and start cutting rates? The market is not expecting that. The dollar Mexican peso would unwind a lot of these carry trades, and we would be trading a lot higher on Thursday if that is the case. Now, I'm not expecting that, but they might be more dovish if inflation comes in weaker than expected on Wednesday. So what am I trying to say here? The dollar MEX is aggressively and heavily in play this week. Because if you're not paying attention to the peso, yet you do kind of trade it, you're missing out. This week's going to be a big one for the dollar MEX. And not only for the inflation data, Banxico, but risk aversion and risk appetite. If stocks start to slide, you're going to see that carry trade become more wobbly. That means the Mexican peso will weaken. So just keep that in mind. It's a big deal this week. Okay, continuing on. Friday. Thursday night. Let's go back to Thursday night because it's actually Friday morning in the UK. We have the UK GDP. So I was talking about why it's so important. We have advanced GDP coming out of the UK. We're back into this zone, right? And there's been a lot of talk, and it's a nasty word getting thrown around the UK called stagflation. Stagflation is when you're in a low or no growth environment and you have high inflation. We're getting preliminary GDP, early GDP figures out of the UK on Thursday night, Friday morning in the UK. If you have any sterling exposure, you got to think about that because now you have it's already been a problem for the Bank of England, and they just met this last week. But if you have stagflation and you're the Bank of England, what do you fight? Do you fight? Do you fight the growth aspect of your economy and start cutting rates and being looser with monetary policy and spike inflation just to save the economy? Or do you continue to ratchet rates higher to clamp down on inflation despite throwing, the UK economy into a deeper recession? It's a tricky one, and it's a tough question if you're a central banker. And that's why the GDP data on Friday morning out of the UK is going to be very important. And look, I'm not a central banker, and I don't have an opinion since I really haven't experienced in my 25 years of actually trading a situation of me trading currencies where we're in a stagflation environment. So I don't know. You could probably historically go back and take a look, but I think that all of us as traders need to be open-minded and understand that price action is probably going to be more telling, following data, understanding how the market feels, rather than you make an assumption that since we've, there are people that are watching this video that have experienced that, but a big majority of us, we haven't. So I think it's going to be important to watch price action on Thursday or Friday morning following that UK GDP data. I think it's going to be fairly important this week. All right, continuing on this week with Friday, we're going to have producer prices. Did I already say that US CPI? Oh, I think I skipped right over it. I think I skipped right over that we have US CPI. That's obviously the most important thing of the week for probably the market is looking at inflation data because they want to know, is the US is we or ain't we going to continue raising rates? Is the Federal Reserve finish raising rates or not? And I think a lot of those questions are going to be answered on Thursday with the inflation data. And we do have unemployment claims, which, look, our jobs data continues to be pretty damn steady here in the U.S. But when's that going to change? We'll probably start to see it show up in unemployment claims. And remember, we had a spike higher in unemployment claims 4 or 5 weeks ago. We could go back and we can take a look at exactly what it was. Let's figure that out. Unemployment claims. Well, I don't want to do that right now. I'm not going to waste your time. But you can go back and say, I think it was like 5 weeks ago. Anyway, so we'll be watching that. But it's obviously all about inflation this week. Because if inflation data is weaker, right, comes in below expectations, and let's say, the CPI year over year comes in like a 2 handle, which is it possible? Sure. You're going to see the dollar absolutely get destroyed in a situation like that. People will say the Fed is done. The next move is going to be a cut, whenever that is, whether it's in 2024, 2025, whatever, doesn't really matter. The dollar is going to get absolutely smashed. Now, if that inflation comes in at 3.3, 3.4% as expected, maybe even a little bit higher, you're going to see the dollar rip. And don't forget, and I should probably pull this chart up right here. This is the COT data in the euro. You can see the euro. There's still, asset or leverage funds are still pretty long euros, and this is most recent data from this week. And large speculators still pretty damn long too. So. The reason why I say that is, I thought there'd be more euro liquidation over the last 2 weeks, but based on the COT data, there hasn't been as much as I thought there would be. So what does that mean? Well, if the dollar rallies, you could really see, the euro come under pressure quite aggressively from some of these, larger hedge funds that are still long euros and short dollars. So that's something else to take into consideration as we go into CPI data on Thursday. Okay, now wrapping back up, going back to the dollar, we also have producer prices. And we have University of Michigan consumer sentiment and expectations that are also coming out on Friday. But, we could get a double whammy because if inflation comes in, like let's say it comes in hot and then PPI from a producer standpoint comes in hot as well, then we know that the Fed is far away from reaching that 2% goal on CPI because, producers, if they're still seeing an inflation, think commodities, guys, think commodities. If they're still feeling inflation, then they're going to be passing that down to the consumer. It's just going to make it more difficult for the Fed to continue to fight that fight. Okay, let's continue on with just a couple more key charts I want to go over that I think are important. So let's go over to the stock market. And while I'm here, you seeing all this volatility. Look at the DAX. We hit new all-time highs underside of this trend line, which we were talking about last week, and we came off aggressively. The DAX, by the way, if you go look at last week's week ahead video, and we talked about how key that resistance was, it sold off 4% since last week's week ahead video. Go look at my comments on the DAX. That's some good volatility. You want to take advantage of volatility? Well, go to the Trader Funding Program. And by the way, Miles, who's been a client and subscriber of mine in one way, shape, or form for literally 20 years. Miles is father reached out to me and told me that Miles passed his trader funding program on Wednesday or Thursday this week. Congratulations to you. But actually, a lot of people have. That means that Miles is now trading our capital. So if you want to learn how to trade our capital, and let's say you don't have a $25,000 account to trade, or you don't have $1 million account to trade, or somewhere in between, take an assessment. Once you take an assessment, you pay to take an assessment. If you pass, you can trade our capital and keep 75 to 90% of the returns. And you have an unlimited time to do it, and you get to be inside of the Forex Analytics community, talking to me, talking about the trades that I'm in, and the rest of our staff and other traders on our community that I showed you earlier. Why wouldn't you want to do that? Because we want you in our community. So if you're trading our money and you're trading our capital, we'd like to have you there, so you can have as much help as you possibly need, as we can possibly give, put it that way. And that's important to take advantage of when there's a lot of volatility, which we have that right now. So if you want to learn more about Trader Funding Program, you can click on the link down below. It'll take you right to Trader Funding Program, or visit traderfundingprogram.com, or you can find the link from the Forex Analytics homepage. It's right here. Okay, that's us. All right, going back to the DAX. So the DAX reversed pretty hard. We are at the 618. We're holding around there. Other key developments this week in equities. Look at the Nikkei. So the Nikkei is back in its flag. So I don't really want to look at it as a flag anymore. All I'm going to look at it as is a bullish consolidation. But more importantly is if we end up breaking some of the support, a lot of people will be looking at it as a double, possibly triple top. And notice we're just coming down towards support. So Nikkei is getting really, really close to kind of a, bull bear line, if you will. Now there's a big breakout point here that you all know of, but we start breaking down. I don't know if that level is going to hold. That's something to be thinking about. Also, gold. Gold's been a big one. I want to go over to gold because gold, that inverted head and shoulder pattern, I'm not looking at it so much like that anymore. It still is a possible inverted head and shoulder pattern. It really is if we could break above, this level. And that's going to have more to do with what's happening with inflation this week. But gold is, I think, flirting right now with some pretty key levels. We break through 1985. This thing becomes really bullish. But we start breaking through this 1900 level. I think gold's gonna move a little bit more lower, a little lower, a little bit more aggressively. And think about it as the inverse of the dollar index. So it's just something to think about. Okay. Next, I want to talk about the Nikkei. I already talked about the Nikkei. I want to talk about the NASDAQ. Look at the NASDAQ 100. And the NASDAQ 100 is right at just remember, we're right at a breakout point, but also, let's delete this fib retracement. We're struggling with that 161% extension. And, we get below this support, this becomes a false breakout if that happens. Now, that's why you should be watching very carefully what happens in not only Apple, which you can see is moving lower. We talked about it at the very beginning. Amazon, go look at NVIDIA. Watch those stocks. Watch some of those, Netflix's, all those. Start watching those. And, if we break back below this level, false breakout. Okay. It's really key. Let's just put it that. NASDAQ's really key here. Also, staying within the theme of equities, if you look at the Dow Jones, we are just, struggling with that 127% extension and of the last, kind of range. Again, these are important levels. We get back below these breakout points, and you're going to see the Dow pretty much come under pressure. So watch Microsoft, watch Amazon, watch Apple, watch stocks like that. Okay, Russell 2000 double top. Anybody? False breakout of a triangle. It's a little bit of a risk here if we start breaking through this support. You can see it right here. We start breaking through that support, and then you're starting to think about the heartbeat of U.S. equities really coming under pressure in the event that happens. So and like I said, nice little double top in development. So guys, gals, I want to say thank you for hanging out with me. I hope you're having a great weekend. And again, if you like this video, make sure you give us a thumbs up. Remember, don't forget to jump on our shows. We do free shows all week. We do all week. We have the Flow Show that's in European hours. It's headed by Mr. Ryan Littlestone. And then we have Stelios Contagoulis and K-Man joining him there. And then after I wake up, we have the Face Show where you have the rest of our staff, but you also have Ryan and K-Man and Stelios to kind of update what's happening in European trade that those of us that are in North America might have missed. So we offer these free shows every single day, so make sure you join them there. Guys, gals, I want to say thank you so much for spending your most valuable asset that you have with me, which is your time. Thank you so much. I hope you have a great weekend. I'll see you on Monday morning on the Face Show myself. All right, see you then. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.